Hey, can you hear me? Okay.
Yes, I can hear you.
All right. Now let's proceed with IS-19 employee benefits. And now we are on the other part called asset what? Asset sailing. You understand the meaning of sailing, right? Is the sailing at the top or the bottom?
Top.
Top. Very good. So since it's at the top,
Mm.
we speak of the sailing. We try to fix an amount, right? We try to fix a cap. We shouldn't go beyond
Okay.
a certain point, right?
Okay.
Yes. And as you know, when we speak of defined benefit pension plans, right? We have the plan assets, but also the plan what? Liabilities. So we are trying
Liabilities.
to 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 place a ceiling on these assets. That's why we say most defined benefit pension plans are in what? Deficit. Most of them are in deficit. That the assets will be outweighed by the what? By the liabilities. Like we said, we
Liabilities.
don't show assets and liabilities separately. We take the net figure, right?
Yes.
If the liabilities are more than assets, we would have a net liability, and if assets are more than liabilities, we would have a net what? Asset. So most of
Assets.
them are such that liabilities exceed the what? The assets. However,
Assets.
some defined benefit pension plans can show a surplus. Now you can see when we have a surplus, it means we have more assets than liabilities, right?
Yes.
Before proceeding any further, I could remind you on something. We spoke of the difference between defined benefit plans and defined contribution, right?
Yes.
Plans. We say when we speak of the defined contribution, after the employees contribute, they no longer have any obligation, right? But for defined benefit
Yes.
pensions, they keep having those obligations. And that's why, in case they have contributed so much, they could be given something called contribution holidays, right? By contribution holidays, it's like, okay, in the usual cases, you usually contribute a certain amount, but you are told, okay, since you will be since you actually have an obligation for this, no worries. This time I can see that you have contributed a lot, you have a lot of assets. Oh, don't contribute anything, right? That's what we call contribution what? Holidays.
Yes.
So just like when
Holiday.
the liabilities are so much, the company has to compensate. It is also when the assets are so much, the company can be given the contribution holiday. So meaning that they can be temporarily exempted from contributing into the plan, right?
Okay.
Yes. So you can see the point until the fact that you can have the contribution holidays goes to show you that okay, so if you have a certain you have some if a certain figure of assets and maybe the liabilities are not that much, you could be told don't pay. So now we come specifically here to fix that asset selling. So we say if a defined benefit plan is in surplus, ICE 19 states that the surplus must be measured at the lower of that surplus, okay, let's say the assets were worth 80, right? And the
Yes.
liabilities were worth how much? 60. Of course, I told you that for the assets, you usually like to put negative and liabilities positive because most items they are expenses and liabilities, right? But for this, of course, they have just tried to
Yes.
use the normal case, so
Okay.
it shouldn't confuse you. So by this, I mean the plan assets are more than the plan what? Liabilities. Which is the
Liability.
net plan what? Asset. So we say surplus. I say that the surplus must be measured the law of the surplus should not be too much. You see,
Hello.
okay, what I'm trying to say is the surplus should not be too much, right?
Okay.
Yes. So what we do, we say the surplus should be measured at the lower of these two. First, the amount calculated is normal. Early examples and illustrations. This is normal, right?
Yes.
How to know how to get these net as planning asset or liability. For the asset, we take the fair value, and for the liability, we take the present value, right, of the obligation, and then we net.
Yes.
So you resort to the original figure, which in your case is 20, right? you had the fair value of assets is 80, and the present value of liabilities is how much? Is 60, and you have your net as 20. So what matters is the second thing. If this is lower than 20, then you have to put your asset at how much at that figure, right? If it is more than 20, you say, okay, no effect. I proceed with my 20. That is always done, right?
Yes.
So the total of the present value of any economic benefits available in the form of refunds from the plan or reductions in future contributions to the what? To the plan. So this is something that we can also deal with. Because remember, when you have the plan assets, you have the net plan assets. Actually, assets have exceeded liabilities. What are you going to do with those liabilities? Right. So sorry,
Yes.
what are you going to do with those net assets? Because the assets are the economic benefit that are at your disposal, right? That's why you say
Yes.
the present value of any economic benefits available in the form, we now consider this in the form of refunds from the plan, right? Or
Yes.
reductions in the future contributions into the what? Into the plan. The entity has to contribute a certain amount. Maybe instead of contributing 10, maybe you told, okay, you're going to contribute only 8. So there is a reduction of how much? Of 2. Reduction of 2 for the entity, the reduction of cost, it is like the earnings, right? Yeah.
Yes.
So in fact, it's like the economic benefits. That's why you compare what you already have here against now. You see, this is the difference, net of assets over liabilities. But here we go to the actual thing that we can receive. That's why you're told present value of economic benefits available in the form of refunds from the plan or reductions in future contribution to the what? To the plan. So you compare those ones. Whenever you have the low amount, you take it. So simply speaking, if from the second explanation is more than from the first, it means there is no difference. You proceed as you always do, right?
Yes.
Okay, so here we are told this treatment is known as applying the asset selling. It means you are trying to fix the maximum figure, right? We shouldn't go beyond a certain amount. You're trying to place a cap, which means that a surplus can only be recognized to the extent that it will be recoverable in the form of what? Refunds or reduced contribution. It's like we have tried to calculate to place impairment in itself, right?
Okay.
You saw that, yes. Impairment compare the carrying amount against the recoverable what? Amount.
Amount.
And we will measure at the lower of cost of carrying amount and recoverable amount. You can see this 20 you can
Yes.
count the carrying amount, but only recover. This is what you can recover, right? And impairment is only present when you can recover less than what is in the books, right?
Okay.
And that's
Yes.
why only when this figure in the second point is lower, it means there is an impairment, then you have to reduce it, right? So treat
Yes.
it as if you are dealing with impairment and it will be the simplest thing in the world, right?
Okay.
Yes, so it will be recoverable in the form of refunds or reduced contributions in the future. Asset selling then ensures that an asset is only recognized if it had the potential to bring economic benefit to the what? The reporting entity, which is very fine. Because an asset is an economic resource embodying economic benefits. If you are recording something, and actually, they don't say, but this helps much to keep up with the principle of prudence, the prudence concept. Prudence is all about the exercise of caution to make sure that assets and income are not overstated, and expenses and liabilities are not understated, right?
Yes.
Let's look at this. It says the following information relates to a defined benefit plan. You have the fair value of plan assets, 950. Present value of future refunds. This is a present value. Okay, sorry, I've skipped here. Present value of pension liabilities, 800. Then present value of future refunds and reductions in future contribution, 7. What is the value of the asset that should be recognized in the financial statements?
Okay.
In the way they have written this, they shouldn't have said, yeah, okay, it's just a way, but we don't actually speak of the asset as an asset, right? it means you have to know by yourself that you are dealing with a net figure, right? Because the planning assets, you have
Yes.
them at their fair value at 950 and the liabilities at 800. If you deduct to get how much? 150, right? Yes, you
Yes, 150.
have here. So, like I told you, you treat this as a
Deducting.
carrying amount. So in the books, you
Yes.
have 50, but you can only get 70 out of that, right? Means
Okay.
if I keep maintaining this 150, I'll be betraying myself. I'll be overstating that asset, right? So I have to write it
Yes.
by how much? By 80.
Yes. Okay.
I have to write it down by the difference so that it becomes 70, right? So the law of
Okay.
150 and 70 is how much? 70. So 70 should be my fee, right?
Yes.
Yes. So this should be
It's 80.
70 is my figure, but I am saying in case in the book, so you are told that 150 had been recorded, right?
Okay. Okay.
Yes, 150 had been recorded, it means this would have been an error, right? Now, to correct an
Yes.
error, you don't need to undo that transaction which you recorded because you may have a lot of them. You leave them as they are, but you just pass the journal entries for correction, right? So I would have said,
Okay.
okay, in the books I have 150, but I should have had 70. By how much should I reduce 150 to have 70? I should reduce it by how much? By
By
80.
80.
Yes, so
Yes.
I take 150 minus how much? Minus 80 to get 70. Then you'd
Yes.
just pass the double entries to do that, right? But of course, in this case,
Okay.
we are not told maybe this was had been recorded or what, so it's no big deal, right? The
Yes.
actual figure that we should have by ourselves is 70. Okay, so this
Yes.
standard doesn't have much. The problem with the standards is you should have gone through it. If you don't go through it, actually, you may find yourself having it. You can see what they have done. They are just they try to help you keep up with those principles so that you don't forget it. You see, they
Yes.
have done this. The obligation is usually they have put as positive and the asset is negative because they are used to do that from the very beginning so that you don't confuse yourself. You can see
Yes.
it is positive assets
Yes.
negative. Yes, so you have the net
Yes.
planning asset and you have the other asset of the refund, then you take the lower. Presume as if you are doing the impairment here, right?
Yes, sir.
That's just that way. That's the good thing about this book, it will help you because you have to practice a lot of questions, but they are just similar. You can see like this one, yeah? The following information relates to the defined benefit plan operated by ARC for the year ended 30 June 20X4. The first thing in this is you will have to get the opening balance, if you do remember. The year ends
Yes, sir.
30 June 20X4, so it starts 1st July 20X3, right? Of course, we don't
Yes,
have
sir.
the 20 July, but actually at the end of 30th June 23, we will be on 1st July 23. So it's just like the same way because
Okay.
we are told no, yeah, maybe there have been a certain transaction or what. So you can start using these two figures. Yeah, you have the fair value of planning assets and the present value of the obligation. You can take the net there, right?
Yes, sir.
2600 minus 2000 is 600.
600.
And it's a net obligation, so it's 600. The obligation is 600 positive, like we said. But the obligation to put the positive, usually before going anywhere, we usually compute the interest component. This is the balance brought what? Down. We usually compute the interest
Down.
what? Component, right? You can get it if you have maybe, for example, okay, let's say
Let's bring
you have to get the interest. Okay, discount rate for the defined benefit obligation. We have it here, right?
10%. Yes.
And yes, this one should be at the beginning of it should be here on this, right? Let us join it should be 1st July 2023. If not available, it's not big deal. You can use that for 30 June 2023. Of course, the question has not specified, but you have to be careful. Sometimes it could be provided with the two rates, right? So you have to
Okay.
use the appropriate one. So 10% times 600, it should be 60.
Yes.
That's the interest component. Then you proceed. You have the service cost, either the current service cost, the past service cost, whatever. Current service cost equals 100. It increases the liabilities. You remember that?
Yes, sir.
So it becomes positive Benefits paid 80. What do you do with this?
You put it's zero.
It's zero because the benefits paid in the year, they are
The
reduced
same
to
as
plan assets. So the plan assets
yes.
go down, but they are also used to pay the obligations. So the obligations also go down, right?
Yes, sir.
So since we are taking the difference, there will be a nil here. So you just disregard it, or you can say, okay, it's fine, nil. Okay, and I think we have
Yes.
nothing else. Here we have the fair value of plan assets and liabilities at the end, right? How
This
much?
contribution.
Okay, contribution here, good. It's 90.
Sir,
Contribution.
you've gone.
Okay, this fine now. Contribute
Yes.
how much?
Yes, now it's fine.
This increases the asset,
90.
right?
Yes, I put
Assets.
negative.
Yes, so we have done in this. Okay, I think we are done. We only have these figures for the end of the year are only for the final figure, right?
Yes, sir.
How much do we
For
get at this
measurement.
point? But okay,
Just a
uh
moment. Um,
let's proceed reading.
just doing it here.
Let's proceed. And when you have this question, in case you have the figures at the end, it's no problem. You can just proceed. What if you have the selling figures which are different at the beginning? Then you also have to change them, right? But in the case the figures were only related to 20x4, 30 June 20x4, it wouldn't have been a problem, right?
Yes.
Yes, so let's see this, right? We are told ARC has identified that the asset selling at 30 June 2023 and 30 June 2024, based upon the present value of the future refund from the plan, right? Or reductions in the contribution amount to 200 at June 23, we have this figure, you see? And
Yes.
at the June 20, what am I doing? Okay, same figure it is, right? Amount 200 at 30 June 23 and 30 June 24. So it is the same figure. At June 23, it is
Okay.
2000, right? 200.
Yes.
24 it is 200. Okay, I'm listening to you. What should we adjust there? Should we adjust this opening balance and then affect this interest component? Or we should only come and affect the last figure? Because the last figure, it isn't a big deal, eh? Right? Have you seen this?
Uh,
We
yes, I'm seeing.
yes, like I told you, based upon the present value of the as identified that the asset selling, we already have asset selling, right?
Yes, sir.
What is the asset selling? It is 200, right? Million.
Yes, sir.
200 what? Million. So
Me.
if you take the difference, what do you get here? We have plan assets and liabilities.
2006.
Uh-huh. You know, you hear me? Hello.
Yes, I can hear you. I can hear you, sir.
I was trying to insist again. When you are doing this question, you note that all the assets should be you should put the negative sign and all the liabilities the positive what? Sign.
Fine.
You know until here you didn't do that. Have you noticed that? Plan assets were more than plan what? Liabilities. So this 600 was all
Ability.
negative sign. You see that?
Go to being blanket. Yes.
Yes.
Yes, sir.
If this is a negative, its interest should also be a what? A negative,
A
right?
negative.
Yes. But then
Yes.
maybe in this question, we just have something additional now. We are told that as identified, ACC has identified that the asset selling based on the present value of this, based upon the present value of the future refunds from the plan, and reductions should be this 200. That assets, the net plan asset should not exceed 200, but you had 600 here, right?
Yes.
So you have to make the adjustment. But after making the adjustment and you come to the final figure here, you also have to come here and compare again at the end now. This is the plan asset
Okay.
is 300, 3100, and the obligation is 2400. The difference is 700
2400.
again, right?
Yes, sir.
So we have another what? We have another issue, right?
Yes.
Because the
Yes.
difference here is 700, but there we have 200. So
Yes.
in our books, we would still be having something much higher, which is wrong. So we'd have to resort
Yes.
to the lower figure. So we'd also have to go to how much? To 200 again, right?
200.
Yes.
Yes, sir.
So this question is like it has incorporated the concept of sailing, asset sailing, into the full-fledged question, right?
Okay.
Yes, this is test understanding number how much? Number 8. It's number 8, eh? And
Yes, sir.
let me try to remember. This is page 228. 228. Yes, among the topics you should get the marks quickly is this one. It doesn't have a lot of things. You just go chap chap and be done with it.
Okay.
Yes. The good thing about Kaplan, they leave a lot of spaces. You can feel that okay, the book is too big. No, it's not too big. You can see you can see here, right? Initially,
Yes.
the opening figure was 600, but our
Yes.
sailing was how much? Was 200.
200.
That's why you have to use the 200 here. And if you take that component, it will be 20. Of course, we had done this already, right? We had put all
Yes.
these components here, even the service cost component, we had put it here. Benefits paid, we had put everything here. But now remember,
Yes.
after considering the sailing, this is what we would have to do, right? Just change this and
Yes, sir.
the other figures should be the same because you only change the opening balance and the net interest component because it is computed as a percentage of the opening balance. So obviously it would also change. But for the rest, they remain the same, right? You see, you
Yes.
get this balancing figure. You get to 210 and 650. The main difference being these two, difference in the opening balance and the net
Okay.
interest what component, right? Yes. So as usual, for the
Yes, sir.
this remeasurement component, I told you, you leave it as it is, and you go to the last balance. This should be the balancing figure. So you go to the closing what? To the closing balance. We saw about it already. The difference was 700, right?
Yes.
It was 3100 minus
Yes.
2400, right? You compare to
Yes.
200. 200 is still lower. So our figure should not be 7 what? 100. We cross it and we
700.
use how much? 200, right?
100.
It was
Yes.
a net asset, it was an asset. So it's negative again. So you ask yourself, my final figure is an asset of 200. But above here, I can see myself having a net asset of how much? 210. So it is a remeasurement loss or remeasurement gain.
The remeasurement gain.
Why are you saying the gain? You look here. Finally, it's
210.
200.
Mhm.
No, this is what should have
Yes.
been. Remember, from your computation, this is what you have from your computations. This is what you do. What you do
Okay.
have from your computations. But you tell them,
Yes.
okay, I've got 210 of assets, but they tell you, from what we see, that is from your calculations. From what we see, we can only see 200. Then we'll say, oh, then I've had a loss unknowingly. Yes, right.
Yes.
Yes. So you look at these ones. You look at what are these ones. Also, you can just say the final
So you gone.
that way. Or simply you can just say the final figure minus the previous figure. You can do it, it will be easier this way, right? Take the final figure
Yes.
minus the previous what? Figure. This is 200,
Figure.
but remember it is negative, right? 200 negative
Yes.
minus negative 210. So it would be like negative 200. Negative how much? 200 minus
200.
becomes a plus, right?
Yes.
210. You get plus 10 there, right? Plus 10.
Yes.
If that 10 is positive, I told you whenever something is positive in this case, you consider it having an influence on liabilities, right? A positive influence on liabilities. So it should obviously be a loss, right? Again, it would never have a positive influence on liabilities, right?
Okay. Yes, sir.
So you'd have that figure of how much? Of 10.
Yes.
Yes, you don't need to show these ones, the middle one, in case maybe, you presume that, okay, something was done, and maybe it was done in error. So we are trying to correct. Maybe you could have said, okay, this was done wrongly and this one wrongly, but in this case, that's not the situation. Okay, let's go back. It was 228. 228. 228. After finishing this, then the standard is over. This standard, if you just finish this contribution, this is where the standard lies. Whatever remains here is just a blah blah. Okay, now let's go to the blah blah now and finish up. There is nothing left here. This is what the standard requires to do. Whatever remains is just a very normal thing. Okay, you can see. We said that we have, apart from post-employment benefits, right? We said we have the other long-term benefits. We had the termination benefits, right? But also we had the short-term employee what benefits. These ones are very normal, you know. You may even find yourself maybe benefiting from them on a daily, on a monthly, weekly, or even daily basis. Wages and salaries, bonus and the other benefit. These are just normal, right? You know,
Yes, sir.
when you say that someone is on maybe on salaries, actually, they would have these maybe the pensions as usual, right? The taxes, that's
Mhm.
just normal thing. Those are just the normal benefits of employees. Also could have wages. You know, wages are not like salaries, eh? They could be in form of piecework or hourly, or maybe in terms of hours, right? Something like that.
Yes,
You could have bonus maybe if you do something maybe beyond a certain target in the form of KPI, right? Key performance indicator, they could put them that way. But you can have compensated absences, right? Of
yes.
course, this is the benefit. You are not at work, but they pay you, right? For
Okay.
example, here, you may find maybe 1 year they pay you, the next year they don't pay you. Then the years will be interchanging that way. So it's also a benefit. You are an employee, they pay you. Like for example, maybe the holiday pay, the sick leave, maternity leave. I hope even there it is you also practice it, right?
Yes, sir.
Maybe study leave. Someone may go to study and they'll still be paid military service. Okay, so the key issue is whether the absences are regarded as being accumulating on and what? This is just the main point, which is a simple point, right? By,
Yes,
understand by this, when they are accumulating, it means even if it means we do not have the cutoff point. You know, something which is not accumulating is if there's a specific year ends, then they expire. If they're accumulating, it means they do not what? Expire. You could always claim them in the future, regardless of
okay.
the period within which you have done that. So accumulating are earned over time and they are capable of being earned carried forward. In this situation, the expense for future compensated absentees is recognized over the period services are provided by the what? By the employees. So just do that. Typically, accumulating benefits will result in recognition of a liability, right? At the reporting date for the expected cost of
Yeah.
the reported benefit. It is you are the company. You know that, okay, we have to pay someone maybe 2 million, right? And maybe the person just hasn't
Yes.
come to claim that. So it's our obligation. We have to pay. So you can recognize it in the books, right? Because at any
Yes, sir.
unknown day, the person could come and claim that. That's why he's saying they expect say that uh could recognize a liability at the reporting date for the expected cost of the accumulated benefit earned but not yet claimed by an employee. An example is a holiday pay accrual. Let's say this maybe. We have a holiday what? A holiday pay accrual at the reporting date. The year is ending, right?
Yeah.
The year is ending. Someone is
Yes.
be paid in this year, right? But he has not
Yes.
come to claim that. He has not yet come and say that, okay, I need to go to the what? To the holiday. You definitely know that, okay, it's not going, but he won't leave it, right? Even if, because just claiming it
Yes.
easy, you just come and say, okay, I need to go to holiday, then you pay. Who wouldn't want to do that? You go to ask for the holiday and then they give you money. And then you say it is accumulating. It's just that they believe you are definitely going to claim that, right? So that's why
Yes.
you have an accrual. It should be like an accrued expense where unused holiday entitlement can be carried forward and claimed in the future period. So you see, it's simple. It's like you are dealing with accruals and prepayments topic here, right? Just like we dealt with the defined benefit part,
Yes.
defined benefit, defined contribution plan.
Yes.
Yes. So if not accumulating, I say things will be simple. All these are expense you don't be recognized when the absence, right? You say this.
Yes.
If someone doesn't leave the office, you don't recognize it. For example, where an employee continues to receive their normal remuneration whilst being absent, illness or other permitted what? Permitted reason. Presume something like this maybe. An employee continues to receive their normal remuneration whilst being absent due to illness or that. You can see here, a change to profit or loss would be made only when the authorized absence occurs. Right. It is that way.
Yes.
In case there is no absence, then there should be no charge, right?
Yes.
Okay, we have something called benefits in kind. You know about benefits in kind. They don't you don't have the cash with you, but you have something that, if not provided, you would have had to incur the expenses, right? To have it. So we say it's benefit in
Okay.
kind. Presume someone maybe is paying. I'm just trying to take an example. Don't worry whether it's out of context or not. I'm just trying to give an example of benefit in kind. Presume maybe someone is paying the
Okay.
school for your children. It's a benefit,
Yes.
and because even if they didn't do that, you would have had to take your money and pay, right? So that's a benefit.
Yes.
Presume you have maybe the loan benefit in kind. Instead of having a loan at 12%, maybe you are provided with the loan at 5%. That's a loan benefit in kind, right? You could say the company has
Yes.
provided you with the vehicle to go to the office and back home, right? And maybe even with the driver. Eh? That's a benefit in kind. The company has provided you with a house to stay, right? Or maybe you have the rent.
Yes.
Actually, they provide you with the rent amount. That's a benefit in kind. So that's what we say is a benefit in kind. Recognition of the cost should be
And
on the same principles as payable in what? In cash. But actually,
and
there is no the actual movement of cash between the employer and the employee, right? So the benefit in
yes.
kind should be measured based upon the cost to the employer of providing the benefit and recognized as it is what? It is earned. That's fine, right?
And
Yes. We
yes.
recognize it because it is earned. You provide the house to someone. It's not that you are providing it for free. No, you have just decided to provide it in by other means, right? You provide someone
Yes.
with the lower loan rate. It's not like you are doing that. You know that okay, this person is doing a good thing to me. Instead of me providing them with maybe certain amount of money, sometimes people maybe may appreciate more if you provide them with something else, right?
Yes.
So that's why it's actually a transaction has taken place and it has been earned by the employee, for example, and so it should be recognized, right?
Yes.
Yes. So that's a benefit in kind. And you see, that's why I told you it's a blah blah, but it has something. It has the content, right?
Yes.
So when you find a question having, okay, this is a used leave, this is a used leave, I just go through it, no problem. Okay, then we have the termination benefits, right? I think after this termination benefits.